Hello and welcome to CNBC Africa on this BanKable Insights segment with myself, Zinati Guma. Today we'll be having a conversation with Standard Chartered Bank on the investment opportunities that they do see in Africa. Of course, they say don't waste a good crisis. So as we chart a way forward to economic recovery, we are going to be looking at the areas in which investors can plant their seeds for Africa's economic growth. And for that conversation, I'm joined by Tajinder Singh, the Managing Director and Head of Global Subsidiaries in Africa for Standard Chartered Bank. I've been having a lot of conversations about investment opportunities on the African continent. It really does seem like an opportune time for investors to come into the continent. Tell me, based on what Standard Chartered Bank is seeing, what investment opportunities are there in Africa?
Thank you, Zanati, and it's a pleasure to be on your show and to speak to your viewers. Well, I must start by first mentioning that Standard Chartered saw the opportunity over 100 years ago because we've been present on the continent in 15 sub-Saharan markets for as long as 122, 123, 125 years in several countries like Kenya, Nigeria, Zambia, Ghana, to name a few. To pivot slightly and to address your question, before I get to the opportunities, I just wanted to share some interesting aspects of the African continent, which I'm not sure are very widely known. So you may or may not know, but Africa has more Portuguese-speaking people than the whole of Portugal itself. And over 50% of the French-speaking population in the world resides on the continent. So those are just two of very interesting aspects that Africa has. And as we talk about the opportunities on the continent, I think one has to start by discussing that Africa has almost 30% of the world's remaining natural and mineral resources wealth. So that tells you that clearly it's a continent that's very well endowed. It also is home to 60% of the world's arable land, which speaks to the opportunities and potential of agriculture on the continent. And really in terms of population and demographics, 16% of the world's population today calls Africa home. And it is estimated that by the year 2050, 26% of the world's population, or almost 2.5 billion people, would call Africa their home. So, when you have such interesting mineral, natural resources, population dynamics, clearly, you can understand why Africa is called the land of opportunity and is seen as the continent with so much potential. And really, I think, speaking to the natural and the mineral wealth that Africa enjoys, we've seen how certain countries across the continent have benefited from the extraction of natural resources, whether it's Democratic Republic of Congo or Zambia, South Africa. One interesting fact is that in your country, the plateau of Witwatersrand has produced more than half of the gold that's ever been mined on Earth. So that tells you the potential, but equally that tells you the opportunity that exists, with the right infrastructure, with the right investments in agriculture, and with the demographic population dynamics that Africa enjoys. So really, it's a continent of opportunity when you put all of this together.
Yeah, a continent of opportunity. Of course, you do mention the agricultural landscape, as we do have a lot of arable land, and also 30% of the world's remaining minerals are here. And of course, we have seen our economy is benefiting from the commodity price boom that we have seen during this period. But just talk to me about the other sectors where you are seeing these opportunities.
So we see a lot of opportunity, particularly in sectors like telecom. I think the COVID crisis in particular has highlighted what an important role technology and tech-enabled solutions play. We wouldn't be talking to each other today if we hadn't progressed in the technology spectrum. So really, technology firms, telecom firms, have a great role to play in the continent, and we see tremendous opportunity, both in terms of existing investors, but also in terms of new investment opportunities. As you might be aware, Ethiopia just recently awarded a new telecom license to the Vodafone Group. And that's just one of many examples of new investments that are coming into the continent. We see more and more investments coming through in energy and natural resources. I think if I was to recollect through 2020, despite what was a very challenging environment, we saw the largest ever single private sector investment in Mozambique, with the oil and gas sector being, coming through. That was for natural gas extraction. We've seen the retail sector, and particularly fast-moving consumer goods firms setting up manufacturing facilities across the continent. So, we see tremendous potential in the FMCG and retail sector in particular. And that also links in nicely with the demographics of the continent, which has a young population, an aspirant population that wants to go out, experiment, buy, and experience, the latest goods and services and products. And finally, since you spoke about agriculture, you cannot have such large arable land and not focus on agro-processing. So really, in terms of agro-processing, in terms of the opportunities for supply chains to support the agro-processing sector, we feel there is tremendous opportunity and potential. And these are some of the sectors where we are seeing lots of foreign investment coming to.
And of course, we do know that many African countries historically have dealt with structural limitations. Just paint some color for me on the challenges that Africa has faced in the past and that we need to work through going forward.
Yeah, I mean, I guess every country, every continent goes through a life cycle. In Africa, it's not unique in that sense. But yes, it's been particularly, difficult times in certain regions of Africa. So I think I'd like to start by saying that, Africa is not really one homogeneous whole. Clearly, East Africa has very different dynamics to those in West Africa. And similarly, Southern Africa has really very different dynamics. But speaking to the challenges that, Africa has faced and some of the roadblocks that have hindered Africa's development. So I think first and foremost is infrastructure. It's estimated through a study that was conducted by Deloitte about 3 years ago that Africa needs roughly $90 billion in annual recurrent expenditure just to bridge the infrastructure gap. And this infrastructure gap encompasses sectors like transport, railways, roads, ports, all the way to telecoms, to the supply chains for agro-processing, and a variety of other infrastructure, which Africa remains in deficit for. Of the 90 billion, it's estimated that roughly $60 billion is needed in terms of new infrastructure investment on an annual basis, with roughly 30 billion being needed on recurrent expenditure, to maintain what exists today across the continent. So infrastructure is a big enabler, but it's also a big stumbling block in Africa's progress and development. It's further exaggerated because a number of African sovereigns similarly have struggles with high debt to GDP levels already, and therefore their ability to continue to spend on developmental expenditure, some of which has very long gestation periods, often above 10 years by way of social return, makes it very, very difficult for them to continue investing. So really, infrastructure is one of the big bottlenecks in Africa's progress. And you cannot solve the infrastructure challenges without viable financing alternatives, which is one of the areas which, Africa has made lots of strides on, but equally there's a long way to go before Africa realizes its true potential through continued investments. And we've seen some very large developmental finance come through from the prominent African financial institutions, aided by the likes of World Bank and other financial institutions. Standard Chartered itself has played a massive role in promoting both infrastructure investments, but also of late, particularly sustainable infrastructure investments. And a prime example of that is our investment in Tanzania through the Standard Gauge Railway, which is expected to really revolutionize the transportation and connectivity within the country and bring about massive sustainable benefits by taking hundreds of trucks, which consume thermal energy off the road and help, sustainable power. So infrastructure, is also a big enabler for agriculture, and 2/3 of Africa's youth and overall population depends on agriculture for their employment, for their wealth, and for their earnings. And with investments in supply chain, with cold storage, there are many success stories of how countries have been able to provide additional employment, but also attract investment into these sectors. So I'm sure, I can go on, but perhaps, I'll take a pause there and see if that's a theme that resonates with you, Zinati, and we can go on.
It really, really does. But just sticking to the challenges that the continent is facing, I mean, you mentioned the big projects in Mozambique that are going on, the oil and gas projects. But, I mean, we have seen the risk of an insurgence coming into that country and really risking those projects with some of the companies they're pulling out their employees. We've also seen in Nigeria, the World Bank came in 2 weeks ago saying that the economy there continues to lag behind the rest of sub-Saharan Africa. And the key theme there that is dominating is insecurity when it comes to terrorism. Just talk to me about the risk that investors are seeing there and how the governments can overcome this risk of insecurity in Africa.
So political risk and the risk of security clearly is a very prominent risk which investors are looking to mitigate before they commit large investments, and this has been particularly pronounced given the two events that you highlighted. But when you're looking to put in investments which run into billions of dollars and where you have investment time zone horizons in excess of 15 and 20 years. Then naturally, all of these factors do play an important role. Having said that, there has been tremendous progress in various risk mitigations that are now available to investors, which wasn't possibly the theme if you went back 15 or 20 years ago, when the first wave of investments into these sectors started. So today, you've got political risk insurance that is being provided by several multilateral institutions on the continent. We've got both homegrown African financial institutions, but we also have international financial institutions, the likes of World Bank and their affiliates, that support a lot of these investments through political risk insurance, giving investors the comfort that their investments are going to be looked after and they can have some security and peace of mind. Ultimately, it is very much about looking at the risk and reward for a lot of these investors. So much as the investments come into oil and gas and sectors which might have some security risks affiliated, I think balanced economic development is a key mitigant to some of these security concerns. And you've seen a number of African countries led by the likes of Nigeria, Ghana, amongst others, promote the concept of local content, which is really a means of making sure that wealth is equitably distributed. There are opportunities for African institutions, African corporates, and small and medium enterprises on the continent to participate in economic activity, in skills upgradation, in providing employment opportunity for the wider population around the areas which might otherwise have a tendency to not have been developed or attract enough investments in the past. And these are all the means through which a lot of the security risks are naturally mitigated, because clearly economic development is usually at the heart of most security concerns. So we've seen these strides, and that's how we continue to see fresh investment coming in using a lot of these risk mitigations. And as a bank, we've played a prominent role in sourcing and bringing in a lot of investment from newer corridors coming into Africa.
And another risk to Africa's economic growth, Tejinda, is the energy insecurity that Africa faces. Just the other day, I was talking to a renewable energy independent power producer that's just established a power plant in Togo, really saying that 32 countries in Africa face an energy deficit. Considering that Africa is still heavily dependent on coal, fossil fuels, I mean, 5 of our biggest economies are fossil fuel heavy. Does Africa have enough motivation to move to renewable energy? And do we have enough incentives for foreign investors to come in to invest in that renewable sector?
I would absolutely agree, Zinati, that this is the way of the future, and we are already starting to see a big change in the energy mix across a number of countries and across the continent. So, if you went back and spoke maybe even as much as 10 years ago, most of the new investment coming in was in thermal and fossil fuels. Today, one sees more and more investments in solar energy, in wind energy, and in geothermal energy, of which, Kenya, Ethiopia, and East Africa are prime examples. So obviously, different countries within the continent are at different stages of development and where they are in the energy mix cycle. But, I'd like to particularly take the case of East Africa and Kenya, Ethiopia as prime examples, where almost 50% of the energy mix is today coming out of renewable sources, whether it's hydroelectric source or it's the geothermal source, which is increasingly becoming more and more important in the grid stabilization and provision of the alternate to thermal energy sources. It's really helping lower the cost of energy. So the incentives are there. The incentives are there because there are now lots of investments and financings which are available and which are shutting the door on the traditional fossil fuel and thermal energy mix. Standard Chartered as a bank, globally has committed to promoting sustainable financing of $75 billion by the year 2024, and of which we've said $40 billion will be for project financing for infrastructure that promotes sustainable development, and $35 billion goes towards clean technology. So clean technology, including power generation, transmission, are all areas in which we have made this commitment. So the incentive for really a lot of the sovereigns is based on the fact that the new era of renewable energy is clean. It helps them meet their sustainable development goals. It helps reduce the carbon footprint, but equally it helps to lower the cost of energy that they have to provide to their constituents. And we've seen a dramatic drop in the cost per megawatt, being produced on the continent. And for a continent that's so well endowed with solar resources, with wind power potential, clearly, I think the future is that we will continue to see more and more investment coming through in these two spaces, for sure.
East Africa really waving the flag there with 50% of the energy sources being renewables. But just, of course, we can't have the conversation of economic recovery and economic growth without mentioning COVID-19. We do know the heavy impact that the pandemic has had on economies. And of course, as we get vaccinated, and we do know that we won't really have a synchronized recovery. There is going to be what they call a multi-speed recovery. Just walk me through the countries that you see recovering very well from this pandemic and the countries that will be lagging, of course, also looking at the vaccination rates that we are seeing at the moment.
So I think the first thing to mention, Zinati, is really the impact that the crisis has had. I think sub-Saharan Africa has seen its first recession in almost 25 years on the back of the economic impact from COVID crisis. Any recession is not easy to come out of. But like you said, there will be some countries that will have a faster recovery and will be more resilient than others. I think the factors that will play in the next couple of years, we're already seeing a commodity super cycle. with commodity prices reaching new levels. And this is obviously very, very beneficial for countries that have a lot of natural wealth and rely on extractive industries. The likes of Angola, Nigeria, Zambia, Democratic Republic of Congo, which have vast natural resources and will benefit from the rise in commodity prices. They did receive a shock because even though prices were on the uptrend, the response to the COVID crisis meant that productions had to be cut. A lot of the corporations had to go back and rethink new ways of working and how they could adapt to working in a safe and healthy environment where their employees were not put at risk. And that naturally weighed down on production capacities. But we're seeing, new ways of working, adaptation to newer standards of health and safety, and the use of this health and safety kits for employees, bringing back the confidence to go back and really resume production to normal levels. So extractive industries clearly will have a natural advantage. A lot of our economies in Africa that rely on travel and tourism clearly are feeling the challenge and will take longer to recover, in my opinion, because travel is not going to be the same till confidence comes back, and you refer to vaccination, and until large parts of the population have been vaccinated, vaccination protocols for arriving passengers who feel safe to travel, despite all the protocols that exist today, will take some time because it's also a matter of confidence. So recoveries of some of the island nations on and across the continent is going to be slightly slower as, travel and tourism will take slightly longer to recover till confidence comes back. But just touching on the point on vaccination, I think it's obviously an extremely important ingredient for revival. And, through the various developmental interventions that are taking place, whether it's the World Bank aided COVAX facility for the continent, or it's the government-to-government initiatives to import vaccine and to try and vaccinate large parts of the population. We do know that this is going to take time. So as Standard Chartered, we're playing a role in helping to accelerate some of these programs. Standard Chartered set up a $1 billion fund to aid private sector enterprises which were engaged in the activities of PPE kits, ventilators, and now increasingly towards healthcare and vaccination systems, really in supporting and aiding supply chain. Our first disbursement under the facility was made in Uganda to a healthcare firm, which was helping promote the distribution of PPE kits and ventilators for frontline workers and for the healthcare sector. So we have almost $100 million allocation for Africa. This is across a number of countries. And really the focus today is on how do we help to smoothline the vaccination supply chains, whether it's cold storage, whether it's transport systems, so that we can facilitate a faster vaccination program and work step and hand in hand with the governments of the day to promote further vaccination programs as a way of bringing back the confidence on a post-COVID recovery environment.
And just on that, Tajinda, how have your clients at Standard Chartered Bank coped with the challenges of COVID-19, and how is the bank positioning them to ensure a stronger recovery from this?
So we've seen, a lot of responses to COVID-19, and some very, very resilient stories across our client base. If you were to speak to a lot of our clients, they would tell you that it was practically impossible to think about conducting offsites, team meetings, all through a virtual mechanism. So I think we've seen new ways of working where a lot of our clients have tended to rely on digital channels. As a bank, we pride ourselves on our straight-to-bank electronic platform that enables clients to connect with the bank seamlessly and in a secure environment where they don't have to use a single paper drop, and it takes away the operational risk in sending instructions to the bank and in transacting with the bank. So we've seen many of our clients adopt more and more digital channels. I think as Standard Chartered, we pride ourselves that almost 86% of our transactions today in the corporate and investment space is all done electronically. And we think that this is a trend that will continue to improve. But on the client side, we've seen some of them really make dramatic changes to their supply chain network. They've come to realize that the level of inventory stocking needs to be revisited in light of shortages, the length of time it's taking to get shipments from the production centers down to where they need to be used and consumed for finished products. There is an increasing trend to try and look for alternative raw material sources, which can be sourced locally. And I think that's really a big opportunity for us in Africa to promote local content, to promote local manufacturing, and to promote local processing. So multinational clients in particular have also been very, very conscious that interest rates, across the continent, and if I was to take just 3 key markets, South Africa, Kenya, and Nigeria as cases in point, they've seen interest rates come off to single digits. And whereas a lot of the traditional working capital support used to come through intergroup funding for a lot of multinationals, they've started to rely increasingly on sourcing their working capital requirements for financing needs from domestic banks and financial institutions. So these are some of the changes that we continue to see in response to the COVID crisis. So really, a lot of resilience, changes to the ways of working, orientation to supply chains, and really reliance on alternative products and raw materials where possible.
All right, thank you so much for the advice and really fascinating insights on where Standard Chartered Bank sees investing opportunities in Africa. That was Tajinder Singh, the Managing Director and Head of Global Subsidiaries in Africa at Standard Chartered Bank. And that's it from me on the BanKable Insights segment on CNBC Africa. It's goodbye for now.